Welcome to Mastering the Sweeps, a Nueva Voz trading series. Here, we apply the Lighthouse strategy, a disciplined approach to observing liquidity, structure, and probability in the market. Remember, your job is not to find trades, your job is to observe the market until it reveals one. So, again, welcome. This is episode 10. Oh my gosh. Super excited for this one. We have been diving deep within liquidity, and today I did not come to play. I added something towards the end just for you guys, so I hope that you enjoy it 100%. So, let's go ahead and get started because I like to keep these videos around 20 minutes. Okay, so we're still diving in deep with liquidity. Last week, we learned how equal highs and equal lows play effect with liquidity sweeps. But now we're going to really focus about when. When does liquidity sweeps get taken? Okay. So most traders see this and think it's a breakout, but what most well, but what actually happens is that liquidity is being taken, and today we're breaking out of liquidity sweeps, what they are, and what they look like, and why most traders get this wrong. Okay. So by the end of this, you won't just see sweeps, you will understand what they actually mean, and more importantly, what not to do when it happens. Okay, so let's go ahead. Your foundations. Nothing in the market is random, first off. Okay, price moves with intention, and that intention is tied to liquidity. Equal highs and equal lows. These are not support and resistance. I will not go in deep about those two. Make sure you watch my previous video, episode 9, because we dive in deep all about equal highs, equal lows, what makes them equal highs and equal lows, and just more. Okay, so just know, if you just started, okay, these are targets where orders are sitting. And most people, retail traders, people who trade smaller accounts like us, okay, they say support and resistance. Today, you will learn that basically it's liquidity. That is what institutional people use. Okay, so now the real question becomes, what happens when price actually reaches those areas? A liquidity sweep is when price takes liquidity. Above equal highs is buy side liquidity taken, but below equal lows, that is the area where sell side liquidity is taken. Again, this is not random, but this is intentional behavior. And again, if you don't know what an equal high is or a buy side liquidity is, please watch that video from last week. Okay, so right here, this is a sweep. Price approaches equal highs, moves above them, takes the liquidity, and then react. That moment, that's the sweep. Okay? One more time. I even go closer. Okay. So as price was approaching the equal high, this white line, which we're moving No, actually, I'm sorry. I was thinking about resistance. No, we're keeping. We're keeping liquidity in equal highs. Those are the two vocabulary words we are using. Okay. So as price is approaching the equal highs, which are the white line, where the white line is, liquidity is being taken. This is the sweep. And if some people would consider this long wick, a wick is basically a long line, the liquidity sweep. And I was thinking it too, but then for it to classify as a liquidity sweep, it must have a major move that's going in the opposite direction. That didn't occur here. It occurred closer to this liquidity sweep. Because look at here. You will learn more and what this is soon. Now, this is the most important shift. A sweep is not just the move, it is the event before the move. I'm going to say that one more time. A sweep is not the move, it is the event before the move. And not every breakout is a sweep. Without liquidity, there is no sweep. Okay? And we're going to still dive into liquidity because there's so many variables that make a market look like it has a sweep, but it's not. But just know, no sweep equals no liquidity. And liquidity, if you just break it down to like the simplest term, it's just a collection of money. So let's talk about what most traders think. Retail traders. Most traders see this and think, oh, okay, price broke the level, so direction is confirmed. I'm going to get in. And that's exactly where they lose. Because, again, liquidity sweep is the event before the move. That's like the activation. That's like your green flag. Like, hey, come over here. Look at me. Now let's dive in deep about the why. Because now you know the what, you know the core frame, you even had a picture. Okay? So let's talk about why. The market needs orders. Orders are money, again, okay? Where stop losses are here, okay? Where people enter or exit, or where money is filled, okay? Those are just some examples that I added here. But just know overall, the market needs orders. So price moves to these orders to trigger stop losses and to fill in those large positions. And guess who's filling them in? It's the institutional buyers or sellers. And that's why sweeps happen. And every sweep follows a structure. Price approaches liquidity, price takes it, and then it reacts. If you need to take a screenshot of this, of basically the structure of a sweep, go ahead and do that. Now, let's zoom in even closer. We're going to use this structure to identify the sweep very clearly. Okay, we're breaking it down. If you don't see this sequence, it may not be a true sweep. It's the same image as the one above. Well, in the previous slide, I made sure that everything is connected. It is the same so that you don't have to focus on a different structure. You are looking at the behavior right now. So make sure you pay attention to the behavior. So earlier, we knew that the market was approaching the equal high. which was the white line. After it approaches, it had reactions. So now, after the approach to liquidity, price takes the money, all the stop losses, all of the pending orders that was here. They took the money. Because remember, liquidity is money, and the market needs money to be able to make those moves. Think of it about like a car. The car is driving, let's say, to Florida from Texas. Okay, so now that we're getting closer to the Florida, okay, we run out of gas. We need this gas. Let's stop at this gas station, fill up. So the market is filling up right here. Now it has all the fuel. It can just take off, and that's exactly what it did. What it did. It had that reaction. So after liquidity is taken, nothing else is confirmed yet. Price can still continue, reverse, or move sideways. Okay, sideways is a consolidation. At this stage, the market is still forming direction. That's why I said like liquidity is the event before the move. It's just like a flag to get your attention. This is step one, always. So after the behavior, okay, and especially if it's not clean, this is what it looks like after a sweep. Movement is not clean, direction is not obvious, but that's normal, okay? That's normal. So after the sweep, usually it likes to try to find some structure. So in this area, especially after that big move in the opposite direction, you do nothing. You wait. You wait and you follow your structure, your sequence. When you see a sweep, again, do not act immediately. Your job is just to observe, understand, and wait. The biggest mistake is to enter too early, especially before confirmation exists. This is your framework. This is your framework. Identify liquidity, watch if it gets taken, then observe what happens next. Do not skip those steps. Again, identify liquidity. It approached my equal highs, also is known as the buy side liquidity. Again, different names, but same meaning. You need to know those two words. So I broke it down even more so you can really see the form. Liquidity forms. Remember, money is becoming. Liquidity gets taken in this liquidity sweep. Now we observe price behavior here. In this area, we are only observing. We are not entering yet. And in this 4-step sequence, this is already like step 2. So you're halfway into mastering the sequence. Okay, let's talk about your mindset real quick. You are not training to enter. You are training to have recognition, patience, and discipline because that's your foundation for everything that comes next. Most people don't fail at trading because of the skill. Trading is mainly about your mindset. Can you be patient, especially when the market is not giving you your framework? Are you going to rush it because you need money right now? Have that discipline. So now let's look at this chart. And I want you to find liquidity, identify if it was taken, then observe what happened after. Do not predict, because you know it. Go ahead and screenshot this. Please, please, please. Go I'm still trying to figure out like how can you guys send this back to me because I would love to see your work. I would say pin it or maybe like you know what? If you're watching this and you have a suggestion about how you guys can send this back to me, please let me know. I would love to see your markups. But here's a closer view. Make sure you screenshot this and try it out. I'll give you a few more seconds. All right. Okay, here's your focus question for the rest of the week. Okay. Did price take liquidity or is it still approaching? If you just ask yourself this one question every time you get into the market, this will help you eliminate at least 50% of mistakes. So again, your question is right here. Did price take liquidity or is it still approaching it? Okay, so before we start wrapping up, just know a sweep is not the confirmation. If you don't learn anything else from me in this lesson, a sweep is not confirmation. It's the preparation. It's like the warning, like, hey, come over here. Something interesting is about to happen. Maybe this is for you. So understanding this prevents early mistakes. Now, you know you already have some homework. I gave you a chart. I found the area so you can practice, but now it's your turn. Go to the market. Go to your charts and find at least 3 sweeps. Mark where liquidity was, mark where it was taken, and observe what happened after. Don't trade them, just learn to see them. Okay, that's your task for today. Make sure you screenshot that. Perfect. Awesome. Guys, I did something new today. Um, this was my first time giving you a blank chart for you guys to practice. Now, you always had homework, okay? Well, since I started doing these PowerPoints, but I want you to like really try it out and see if this is helping you. And whatever feedback that you got, I will most definitely take it, learn from it, and do better with it. So I hope that you enjoyed this PowerPoint that I created. I took my time. I thought about the every chart, image, everything that I did to create this. I thought of you. And I thought of me. Because don't forget, I rewatch these videos. I do, and I learn from them. Okay? So I hope that you are able to rewatch, learn from them, take notes, and just be the profitable trader that you know that you can be. Don't forget to comment your one thing that you learned today. Have an amazing day, and thank you so much for tuning in. See you next week.